I think with regards to the rise in interest rates, as you said, like the markets have continued to do well for a number of reasons, which is often been discussed. First of all, in terms of fiscal and monetary stimulus, earnings revisions have been very positive in terms of the universe that we look at, as well as there's prospects for a better second half in terms of growth of the economy. Certainly, as the COVID vaccine roll out, and there's going to be questions surrounding the success of that vaccine. Again, just getting back to interest rates and sort of where we are now. I mean, we've had a lot of internal discussions about the level of interest rates and the steepening of the yield curve. But we also think it's instructive to kind of look at the magnitude and direction and timing of these interest rates. I mean, if you look back, historically, the steepening of the yield curve has been more positive for shorter duration assets and less so for the longer duration growth type names. In terms of like the shorter duration names, we've seen an outperformance of small cap values and the more cyclical names that's been happening since November. But you have to also look kind of underneath the surface in terms of what are the reason for this deviation in interest rates. Historically, if rates have been driven by Fed policy, that's sort of a negative to the markets, whereas if it's driven by growth, that's been seen as more of a positive with regards to interest rates.
Yeah. So given that discussion and the nuances of it, I guess where do you fall in that debate, and how is that driving your investment thesis as 2021 unfolds here?
In terms of our investment thesis, I mean, we look at when we focus on tech and innovation, and as I said before, historically, that steepening of the yield curve has caused us to kind of look at, having some more, diversity in the portfolio with regards to growth and some of the more value-oriented cyclical names. If we look at particular industries, if we were to sort of ask that question for the sake of discussion, the rising yield curve has tended to be more favorable for, semis, as well as in the hardware space, specifically with regards to components and some of those companies that are geared to autos, which is also cyclical. But there's also, some of these secular growth stories that can perform in any rate environment. We've sort of taken a barbell approach in terms of, having some exposure to some of these secular growth stories, such as, clean tech, 5G, and cloud software and infrastructure.
Shepard Smith here. Thanks for watching CNBC on YouTube.